So when you hear the name Mohnish Pabrai, you probably think legendary investor, right? A total disciple of Warren Buffett. But here's the thing. The most fascinating part of his story isn't just about the stocks he buys. It's about how he was made. Today, we're going to rewind the clock and uncover the incredible transformation of a cautious, by-the-book engineer into one of the boldest investors on the planet. And that really is the central question, isn't it? How does a guy who's trained in logic and structure, who followed a perfectly safe career path, just pivot completely to embrace risk and uncertainty? The answer is so much more than just about money. It's a really fascinating peek into the psychology of ambition and what risk actually means.
It all kicks off with this deep internal conflict. See, Pabrai found himself caught between the life he was supposed to live and the one he secretly and desperately wanted.
I mean, if you look at his early life, you would never, ever bet on him becoming the investor he is today. Growing up, he watched his own father's businesses struggle and even fail. You'd think that would scare him away from risk forever. And, for a while, it absolutely did. He chose a safe path, computer engineering at Clemson. He got good, stable jobs at places like Tellabs. On paper, he was the definition of success. But on the inside, he felt completely trapped. Over on one side, you had the corporate ladder. Yeah, sure, the paycheck was steady, but it came with all the office politics, that feeling of being just another cog in a huge machine. And then, on the other side, there was the entrepreneur's path. Total chaos, super high risk, but it offered the two things he was starting to realize he valued more than anything else: control and freedom. And this right here, this is the absolute key to his whole transformation. For Pabrai, the biggest risk wasn't starting a business and watching it fail. No way. The real risk was succeeding at a life he didn't even want. The thought of a predictable 40-year loop of just work, paycheck, promotion, that was way more terrifying than the idea of going completely broke. So that deep-seated fear of just being average, that's what finally pushed him over the edge. He decided he had to make the jump. Just like that, he walked away from his secure, well-paying IT job. No safety net, no investors lined up, no big guaranteed plan. He just left the world he knew behind, stepping out into a future he would have to build from absolute scratch. This was his entire war chest. You gotta see this. This wasn't venture capital or some big family loan. It was a credit card, and this powerful, unshakable belief that he could just figure it out. This is the very definition of betting on yourself. He was completely, utterly all in. Okay, so what did he do? He didn't try to invent the next big thing. Nope. Instead, he did what his engineering mind knew best. He found a problem, he broke it down into its smallest parts, and he started solving it systematically. His company, Transtech, it wasn't flashy at all. He wasn't trying to create some revolutionary new technology. He was simply offering practical IT services, helping other companies manage their complex tech systems. He found a real, kind of unglamorous need in the market and just set out to fill it better and more efficiently than anyone else. And here's how his engineering brain did it. He treated his own business not like a gamble, but like an engineering problem. He asked these really simple but powerful questions. Who actually pays on time? That's your cash flow. Which services have the best margins? That's where you focus. He was constantly optimizing, cutting waste, and pouring every single dollar of profit right back into the business. This wasn't gut instinct. It was the scientific method, just applied to entrepreneurship. And this relentless, analytical approach, it paid off. Big time. He had taken the leap, he'd survived, and now he was proving that a calculated risk, when you manage it with discipline, can actually be the safest bet you'll ever make. So in just a few short years, the company he started with basically nothing but a credit card had become a highly profitable multi-million-dollar business. It was an incredible achievement, and it wasn't born from a single brilliant idea, but from just relentless focus and disciplined execution. He had won. He'd done it. He had escaped that corporate loop and achieved complete financial freedom before he was even 40 years old. For most people, this is where the story ends, the happy ending. But for Pabrai, this was just the beginning of the real game. Because once he reached that first summit, financial independence, he looked out and realized he wasn't looking at a finish line. He was looking at a whole new mountain range he hadn't even known existed. Now, the timing here is absolutely crucial. It's 1999. The internet is everything. Everyone is desperately trying to get into the tech business. And here's Pabrai owning a successful, highly profitable tech company. The logical move is to double down, right? Maybe even take it public. He did the exact opposite. At the very peak of the mania, he cashed out and walked away. Not because he was tired, but because he had found a new and far more interesting puzzle to solve. Reading the works of Benjamin Graham and Warren Buffett, it was like a light bulb went off in his head. He had this huge realization. Value investing wasn't about charts or market timing. It was about analyzing and owning businesses, the very thing he had just spent a decade learning how to do from the ground up. It was the ultimate intellectual challenge, a puzzle that perfectly suited his analytical mind. This was the new playbook that completely captured his imagination. These weren't speculative bets. They were engineering principles applied to money. It was all about understanding a system, finding its true value, and acting rationally when everyone else was being driven by fear and greed. This was a game of skill, not luck. And this is where it all just clicks together. Building and selling TransTech wasn't just about making money. That whole experience was his real-world MBA. It taught him how businesses actually work, how to read a balance sheet, and how to spot what's strong and what's weak. So yeah, it gave him the capital, but way more importantly, it gave him the unshakable confidence to play a much, much bigger game. So what's the ultimate takeaway here? Pabrai's incredible story shows us that success isn't really a destination. It's about the journey of discovering the game you were truly meant to play, the one that engages your mind, fuels your passion, and makes the risk of failure seem tiny compared to the risk of never even trying at all. And it leaves us with a simple but powerful question to think about. What's your game? So how does a super successful tech guy become one of the world's top investors? You'd think he invented some radical new system, right? Nope, he did the exact opposite. Today, we're going to dive into the incredible story of Mohnish Pabrai's first decade as an investor. It's a tale of genius-level copying, and it all kicked off with one simple, but honestly revolutionary question.
And this is it. This is the question. After cashing out from his first company, Pabrai didn't go chasing the next big thing. He didn't try to reinvent the wheel. He just looked at the absolute legends, Warren Buffett and Charlie Munger, and asked himself, why can't I do exactly what they did? I mean, think about that. So simple, but so audacious. And that one little thought, it launched a whole career, a whole philosophy that's completely changed how people think about investing.
All right, let's jump in. We're in section 1, the art of the clone. So you gotta picture this. It's 1999. Mohnish Pabrai has just sold his IT company, TransTech, and he's got a big pile of cash. The whole world is absolutely losing its mind over tech stocks, pets.com, you name it, total mania. But Pabrai, he looks in the complete opposite direction. And this is where he starts building his whole approach, what we're calling the art of the clone. I mean, this comparison really tells the whole story, doesn't it? On one hand, you've got the dot-com bubble, just absolute chaos, hype, and people screaming about a new economy. And on the other hand, you have Pabrai. What's he doing? He's sitting quietly, just reading every single Berkshire Hathaway annual letter ever written. He picked discipline over delusion, He decided to learn from a proven genius instead of chasing some shiny new trend that was about to blow up. And that led him to his central idea, his whole philosophy, cloning. See, Pabrai's big light bulb moment was that in a field as ridiculously complex as investing, trying to be original it's a recipe for disaster. His realization was so beautifully simple. Why not just systematically copy what's already proven to work? So that's what he did. He set out to replicate everything, the mental models, the ethics, the filters of the absolute best in the game. Okay, so he needed a framework for this cloning idea, right? He called it Dhandho. Now, Dhandho is a Gujarati word that just means business or endeavors that create wealth. But for Pabrai, it became this powerful mental model. The core idea is simple. Heads I win, tails I don't lose much. You invest in situations that have really low risk, but high uncertainty. See the difference? It's all about waiting for those rare moments when the odds are just massively, overwhelmingly stacked in your favor. And the actual principles of Dhandho are, well, they're just brilliantly simple, but so powerful. First, like we said, focus on low-risk, high-uncertainty bets. Why? Because the market hates uncertainty, and that's where you find the bargains. Second, stick to simple businesses you can actually understand. No complex derivatives or biotech moonshots.
Third, and this is the big one, imitate what's already working. Be a shameless cloner. And finally, just be patient. This is a long-term game. These simple rules, they basically became the foundation for his entire investing career. All right, Section 2, Triumph in the Crash. So, with this whole philosophy figured out, Pabrai wasn't just going to write a book about it. No way. He was ready to walk the walk. He launched his own fund and put these theories to the ultimate test, right as the market was about to go through one of its most insane periods ever.
So, back in 1999, he officially kicks off Pabrai Investment Funds. And, you guessed it, he cloned the structure of the fund too. He copied it directly from Buffett's early partnerships in the 1950s. The deal was simple. He, as the manager, only got paid after his investors made a certain return. This is huge, right? It immediately aligns his interests with his clients. It builds instant trust.
And the results? Well, they were absolutely staggering. From 2000 to 2002, the Nasdaq was just in a total freefall. I mean, it was a bloodbath. And what was Pabrai doing? He was calmly going bargain hunting. He was buying up solid, boring, out-of-favor companies that everyone else was too terrified to even look at. So while the market was panicking, his fund was delivering these incredible returns. It was the ultimate proof that his disciplined, Dhandho approach wasn't just theory, it worked.
Okay, Section 3, the lunch and the ordeal. So all this early success, it's building up to this one really symbolic moment, a peak, you could say. It's when the student finally comes face to face with the master. But as you're about to see, right after this incredible high point comes his biggest test yet. $650,000 $100. Just let that sink in. In 2007, that is what Mohnish Pabrai paid in a charity auction for one thing: lunch. A lunch with his hero, Warren Buffett. It was a record-breaking amount at the time, and to everyone on the outside, it just looked like, well, like he'd lost his mind. An insane amount of money for a meal. But here's the thing. For Pabrai, this was never about getting stock tips. Not at all. It was about confirmation. It was the final validation that his entire life's work, his whole philosophy, the cloning, the Dhandho framework, his ethics, was perfectly in sync with the greatest investor on the planet. This wasn't just a meeting. It was a graduation.
And then, literally right after that incredible high, the entire floor falls out from under the world economy. The 2008 financial crisis hits. The whole system is just teetering on the edge of complete collapse. And just like pretty much everyone else, Pabrai's fund took a massive hit. Deep, painful losses. Suddenly, the clone of Buffett was facing his own trial by fire. So that brings us to Section 4, Forged in Humility. What happens when a strategy that's been working perfectly suddenly stops? Well, for Pabrai, the 2008 crisis became his greatest teacher. This part of the story isn't about winning. It's about the tough, profound lessons you can only learn from getting knocked down hard. Now, instead of blaming the market or making excuses, Pabrai did something else. He started this deep, brutally honest self-analysis. He just tore apart every single mistake he made, asking himself the kind of questions most of us try to avoid. Questions like, did I misjudge the management? Did I underestimate how much debt they had? Was my ego getting in the way here? And honestly, it's that level of self-reflection that really separates the good from the great. And this whole process, it completely transformed him. The crisis basically took him from being this confident winner to, well, a scarred survivor, but a much, much wiser one. He didn't throw out his principles, not at all, but he refined them. He doubled down on humility, got an even deeper appreciation for protecting against the downside, and developed a level of patience he didn't even know he had. So when you look back at this whole decade, Pabrai's journey really teaches us three huge things. First, the incredible power and, let's be honest, the wisdom of just cloning genius. Second, the absolute necessity of staying disciplined when everyone else is losing their minds. And maybe the most important lesson of all, the kind of deep, meaningful growth that can only come from failure. And that really brings us to the final thought here. Pabrai's story is such a powerful reminder that our biggest setbacks often hide our most valuable lessons. It really makes you think, doesn't it? For every single one of us, whether it's in investing or just in life, what is the most valuable lesson that a failure has ever taught you? After the absolute storm of the 2008 financial crisis, most investors were just scrambling to get back what they'd lost.
But for one guy, Mohnish Pabrai, it was a trigger for this profound change. And not just in how he invested his money, but in how he lived his life. We're going to dive into that transformation.
And really, everything we're about to explore comes right back to this one single powerful idea. This isn't just some clever investing slogan. It's a life philosophy. It's the core of everything Pabrai did after 2008. It's the heart of his long game.
You see, for Pabrai, the crisis wasn't just a financial event, it was a personal wake-up call. It really forced him to reevaluate, well, everything. And it pushed him away from the herd and onto this path that was all about clarity, patience, and a search for something more than just market returns.
So that's what sparked the first huge shift in his thinking. I mean, by 2010, Pabrai had already won. He was a successful engineer, a successful entrepreneur, a successful fund manager. But his next chapter, it wasn't about adding another title. It was about shifting his entire focus from just growing wealth to maximizing meaning. And this search for meaning, it had a direct impact on his investing. The crisis didn't make it more complicated, it made him radically simpler. He doubled down on his Dhandho framework, which basically just means low risk, high return, but now he did it with this whole new level of discipline, shaped by the scars of 2008.
His new filter became incredibly strict. He basically boiled down his entire process into 4 rules that were absolutely non-negotiable. If a company didn't check every single box, great management, a business you can actually understand, a massive discount to its real value, and a long, long runway for growth, he just walked away. Simple as that. No exceptions.
And this right here, this was the core mental shift. He was no longer trying to be the smartest guy in the room or find some brilliant, complex idea. His main goal became laser-focused on just one thing: avoiding the big, dumb mistakes that can completely wipe you out. So where do you find these heads I win, tails I don't lose much kind of bets? Well, this new philosophy naturally led him away from the crowded streets of Wall Street. He started finding these amazing opportunities in places other people were ignoring because of fear or headlines, places like India, Turkey, and these forgotten corners of Europe. He was fishing where the fish were, not where all the other fishermen were crowded. But here's where the story gets really powerful. The most important part of Pabrai's transformation had absolutely nothing to do with the stock market. He started applying his ideas about compounding to something way more valuable: human potential. His inspiration was this legendary philanthropist, Chuck Feeney, who famously gave away his entire multi-billion-dollar fortune while he was still alive. Pabrai had this realization that wealth doesn't have much purpose if you don't put it to work changing lives right now. And that's how the Dikshana Foundation was born. And its mission is so incredibly specific and powerful: find the absolute smartest, poorest kids in rural India and give them all the tools they need to get into the country's top-tier engineering and medical schools. The places like the IITs. And the way they do it is it's beautiful. It's not just a little tutoring. Dakshana takes these brilliant students, gives them a place to live, feeds them, provides every single book, and surrounds them with mentors. They literally remove every single obstacle, so all that's left for the student to do is learn. Now, this is so important. In Pabrai's mind, this wasn't charity. He saw it as the ultimate investment. He understood that unlocking the potential of just one brilliant mind could create these positive ripple effects for generations to come. That's a return that no stock could ever match. So as his focus was shifting more and more towards impact, Pabrai also started to embrace this role as a teacher. He began to openly share the simple but really hard-won lessons that he'd learned with a whole new generation of investors who were hungry for real wisdom. And what he teaches isn't about complicated spreadsheets or trading algorithms. It's about your mindset. He focuses on the really difficult behavioral stuff of investing: the discipline to just wait, the courage to ignore all the daily noise, and the rationality you need to avoid those catastrophic mistakes. Through his writing, especially his now classic book, The Dhandho Investor, he made these really powerful, counterintuitive ideas accessible to basically everybody. He gave people a clear, simple roadmap in an industry that profits from making things complex. And I think the reason it all stuck is his style. He has this combination of brutal, unfiltered honesty and this very calm sense of humor, and he intentionally avoids all the complex jargon that makes so many people feel like finance isn't for them. He talks like a guide, not some guru on a mountaintop.
So all of this really comes together in how he structures his daily life. I mean, to support a philosophy built on patience and long-term thinking, Pabrai had to intentionally design a lifestyle that looks radically different from his billionaire peers. And the contrast is it's stark. You've got the typical billionaire playbook over here, right? Private jets, headlines, chasing status. And then you have the Pabrai playbook, which is built on quiet, deliberate activities, reading, thinking, and maybe most importantly, waiting. His days are literally structured to maximize his freedom to think. He prioritizes hours of reading, he travels to learn, he supports his Dakshana students, and he keeps his own life remarkably simple. All of it is designed to protect his most valuable asset, his ability to patiently wait for that one perfect investment pitch.
He's a master of what you could call intelligent inaction. In a world that's always rewarding constant activity and being busy, he understands that the most profitable move is often no move at all. It's the rare discipline to just sit on your hands until the odds are overwhelmingly stacked in your favor.
And you can see this exact patience play out in how he looks at a market like India. He's not betting on what happens next quarter. He's positioning himself for these massive transformations in infrastructure, manufacturing, and consumer behavior that are going to unfold over the next decade, or even more. So when you pull it all together, you realize every single element of his life, his investing filter, his philanthropy, his daily routine, it's all aligned with one single purpose: to play the long game. His entire life is architected for the next decade, not the next earnings report. And what he's ultimately built is this one cohesive, totally synthesized life. His investing, his philanthropy, his teaching, they're not separate buckets in his life. They're all just different expressions of the exact same core philosophy: compounding value, whether that's in capital, in knowledge, or in human potential. And that leaves us with a final thought. Pabrai's whole story is a masterclass in the power of subtraction, of saying no to almost everything so you can say a huge yes to the few things that really matter. So the question to you is, in a world that is constantly demanding more action, what's the most important thing that you should choose not to do?